Hello and welcome to BSSS Rhythm. And today we are going to look into one of the important topic in management, that is controlling. We are going to take care of two important elements in controlling. One is the concept and the second one is the techniques associated with controlling. What is controlling? It's quite a simple question. When we do any kind of activity, definitely, the activity may not be getting performed in the same way it has been planned. So there could be various deviations. So let us understand the concept of controlling. So let's quickly understand what is controlling. Controlling basically means ensuring that activities in an organization are performed as per the plans. Controlling ensures that organizations' resources are being utilized effectively and efficiently for the achievement of those goals which are quite predetermined. It is basically defined as the comparison of actual performance with the planned performance. There's quite a possibility that we may plan or set some standards for performance, but while conducting those activities, there is quite a possibility that the planned performance may not happen in the same manner. So there can be something called as deviations. Now, these deviations help us to understand where have we gone wrong. Now when we adopt certain processes or methods to reduce these kinds of deviations, we call it as controlling. So it basically helps us to find out how far actual performance deviates from standards, analyzes the causes for such deviations, and it helps us to take the corrective steps or actions so that the deviations are reduced. Now, in order to reduce the deviations, we have to take care of certain methods or infuse certain methods into our processes so that corrective measures could be taken. So, techniques of controlling or methods of controlling is divided into two groups: traditional and modern. So, the traditional methods, the most common ones are budgetary control, standard costing, financial ratio analysis, internal audit, break-even analysis, statistical control, etc. While in the modern, we have return on investment, ratio analysis, responsibility accounting, management audit, PERT, and CPM. Now, traditional controlling techniques. We will go little in depth into these techniques. The most common technique, as we say, is the budgetary control. Now, when we talk about budgets, we know what these are. These are the plans that help us to deal with the future allocation and utilization of various resources so that we can achieve our goals. So, budget basically helps us to plan, and it serves as a yardstick or a base for measuring and evaluating the standards of performance. So we basically, when we talk about this budgetary control, we have production budgets, we can have sales budget, we can have marketing budget. So different budgets can be created, and this budget help us to understand what we have planned and what we have actually achieved. What are our mistakes or deviations? So, when we analyze this gap, we can rectify those mistakes. The second traditional method is standard costing. Now, under this technique, managers record their cost and expenses for every activity and they compare them with the standard cost. So, what it happens is that it helps us to understand whether that particular process or that particular activity that we are doing is profitable to us or not. The third one is the financial analysis. Now, one of the most common, just like the budgetary control, is financial analysis. I hope all of us know that we have to publish our financial statements at the end of the year. So this financial statement also acts as a yardstick. It says that how we have performed throughout the year. So every organization has to publish their financial reports. So it is done by using balance sheets, profit and loss statements. We also conduct financial ratio analysis, and we compare these financial reports to show the financial performance of the business, basically in numerical terms. Comparative studies of financial statements are done under this analysis, especially to understand the change in assets, liabilities, the capital that we have invested, profits that we have garnered, the losses we have made throughout the year. This also helps us to control the mistakes, or you can say it helps us to take the corrective measures so that the next financial year we may not face the same issues. The fourth traditional method is internal audits. Now, this internal audits help us to appraise the operations of the organization, and it is done by internal auditors. Generally, the scope of internal audit is narrow as it relates to financial and accounting activities. But when we talk about this internal audit, it can be done at management level, basically for policies, procedures, methods, documentations, all those aspects which will help the organization to understand where they are, what they have to do for the future, what corrective steps they can adopt in improving themselves, what procedures they can follow, etc. The fifth traditional method of controlling is break even analysis. The break even analysis, when we talk about it, basically shows the point at which a business earns no profit or no loss. This can be expressed in form of the sales element, the production volume, the price of the product, the profit volume ratio, etc. Now, managers in an organization use this break even analysis to determine the minimum level of results they are supposed to achieve while performing an activity. The number that goes below the break even point always triggers corrective actions. The sixth method is statistical control. The use of statistical control helps the organization to understand how they have to consider the task. So it helps in effective and efficient way of doing any task. So the statistical control helps to show the averages, percentages, ratio using different or it comprises of using different charts. Managers often depict their performances, especially when we talk about performance with regards to activities, in form of graphs. Maybe that could be a bar, a pie, etc. And they try to depict their sales, the production, the profits they can earn, the productivity, etc. So this is the most common form of a tool which is again utilized in the organization. Now, moving on from there, we'll move on to the next method called as the modern methods of control. The modern methods that are employed in an organization is return on investment. Now, when we talk about return on investment, it is one of the important and useful technique that provides the basic and guides for measuring whether the capital which we have invested, have we be using them effectively for generating the required amount of return. ROI can be used to measure the overall performance of the organization, or you can say it can be utilized to understand the performance of individual departments or even divisions. The second method is ratio analysis. Now, when we talk about ratio analysis, it basically gives us an insight into a company's liquidity, operational efficiency, profitability by studying its financial statements, basically the balance sheet and income statements. So it as we said, it shows that how far the organization has been efficient in operating its activities, production, the functioning element, etc. The third modern method is responsibility accounting. Now, it is a system of accounting in which overall involvement of different sections, divisions, and departments of the organization are set up as responsibility centers. That means these are those areas which is considered as the key result area or key performing area. Now, when we talk about this responsibility centers, they are created with an aim of achieving the targets which they have set. Now, the responsibility centers here can be of various types like cost, revenue, profit, and investments. Now, when we talk about these four areas, they are so important for any businesses because it basically talks about the financial aspect. The next method is the management audit. Now, when we talk about management audit, they are nothing but the systematic appraisal of overall performance of the management of an organization. So, the basic purpose of management audit is to review the efficiency and effectiveness of management to prove its performance in future. The next one is PERT and CPM. This is the last method which is employed many a times in the organization, especially when they are adopting a project. That is programmed evaluation review technique and critical path method. Now, when we talk about PERT and CPM, they are very much important tool which is used basically in planning and controlling. So they are networking techniques. These techniques basically help in performing functions like planning, scheduling, implementing the projects which are basically time bound and involves the performance element. That is, any activity, when has it started, by what time we have to finish the activity or that particular program, etc., needs to be taken care. So if the program is quite complex, diverse, and interrelated, then PERT and CPM is eventually employed. So these were the few methods, especially under traditional and modern methods, that we have taken care of. In the next video, we shall see how far the controlling steps would be useful in controlling the activities of the organization. Thank you for this session.